Good morning. It's Jeffrey Christian, CPM Group. It's just after 11 o'clock on Tuesday, the 25th of April here in New York. The gold price and silver prices have fallen sharply this morning. They've recovered as of now, but they're showing their downside vulnerability, which we've talked about, and we'll talk about a little bit later in this presentation. Gold got down to about 1986, and silver got down to about $24.53 as a low. But, there was a massive sell-off. Stocks were off sharply overnight. The U.S. dollar was up a little bit against some major currencies. Oil prices were down. Platinum and palladium were down. So it was really a broad-based investor selling off. And actually, interest rates, yields on treasuries actually declined also. I wanted to talk a little bit today about jewelry and decorative objects as investments. We talked about these things superficially, I guess, in some of these videos. But the reality is that a lot of gold and silver jewelry and decorative objects also are investment objects too. And if you've been to India or Malaysia or Indonesia or China, you will have seen how this is. This is a chart of gold, bullion, and coin investment demand, and that's what we usually talk about is levels of physical demand for gold in bullion and coin form, where it's still gold that is readily fungible and sellable as gold. But in many parts of the world, jewelry and other materials, decorative objects, statues, religious objects, tableware, silverware, also have a quasi-investment aspect to it. And this is gold fabrication demand. You can see on this previous chart, a bull market in gold, rising gold prices tend to correspond with investment demand for bullion and coins of 20 or 30 or 40 million ounces. More than 20 million ounces tends to see investment demand rising, or prices rising. And less than $20 million tends to correspond with gold prices falling. But that's 20 to 40 million ounces there. Here you're talking about fabrication demand. You're talking about 90 million ounces, when it's really been negative, 2008 to 2012, it was around 80 million ounces. It got below 80 million ounces during the lockdown. But you're talking about 90, 92 million ounces, and sometimes going up as high as 100 million ounces, much more. And you can see most of it is jewelry, and it's jewelry in the developing world as well as jewelry in the developed countries. Now you can see, prior to, say, 2000 or so, a lot more gold was used in jewelry manufactured in developed countries. A lot of it was in the United States, but also Japan and Italy was a very large company. A lot of the Italian and U.S. and Japanese jewelry companies still exist, but the gold jewelry is manufactured in India or China or Thailand or other emerging nations. And we've seen this, and hopefully I'll remember to come back to it when we talk about silver. But you see jewelry being manufactured in emerging economies that is then exported all over the place. And you see very little manufacturing of gold jewelry left in the industrialized world. Even though those companies still exist, the jewelry is just manufactured in emerging countries. But I want to talk about the demand within those emerging countries because you've got demand for gold, jewelry, and decorative objects as consumer desirable goods. But you also have investment demand. And I'm going to hold this up. I hope you guys can see it. This is a necklace that I bought my wife in Dubai many years ago or decades ago. And the thing about it, it's 24 karat gold, so it's pure gold, and it is exactly 1 ounce of gold. I bought it for about 1% over the gold bullion price in the Dubai souk. And I didn't get a special deal because I was who I am. That was what the price was. In Islamic nations, depending on what level of Islamic religion you belong to and subscribe to, women may only own what they can wear. So a lot of gold jewelry is actually the woman's wealth. And it spreads beyond women too. And so you'll see gold jewelry and decorative objects bought and sold as investment demand with very low markups. Also notice this is a 1 ounce necklace. I bought it in Dubai. They didn't pay for it in grams. It's not a certain number of grams. It's not 32 grams or 10 grams or anything like that. It was bought and sold in ounces, actually dollars per ounce. Just the way it is. So you've got a little bit of show and tell here today. You've got to understand that some of this jewelry demand is also investment demand. The same is true in silver. You have silver bullion and coin investment demand levels, and you can see, when investors are buying more silver, they tend to drive the price up. That was the case in 1979, 1980, into the mid to late 80s, and it's been the case since 2005. And it was also the case in the 1960s when investors were hoarding silver and silver coins to the point where they basically drove the U.S. Treasury out of the silver market over the course of the 1960s. But again, silver jewelry and silverware and decorative objects and tabletop items are a form of investment demand. And if you go to those parts of the world I mentioned earlier, you'll find that in the souks of the Middle East and in the bazaars of South Asia and Southeast Asia, you'll find that there are precious metals dealers who are buying and selling jewelry and decorative objects back and forth. People will use them to store their wealth, and then when they need money, they'll sell them. See if I can do this again. This is a perfect Ganesha. It's a statue of the Hindu god Ganesha, god of wisdom, among other things, and travel. And this is exactly 10 ounces. It was a present to me when I was giving a presentation in Mumbai, again, many years ago or decades ago. And again, it's exactly 10 ounces. It's not measured in grams. It's not measured in other things. It's exactly 10 ounces. It's a statue of a god. So in Western religions, you might think it's sacrilegious to melt it down for its silver value. But in many Eastern religions, it's okay. It's a statue of a god, so maybe you're a little bit more protective of it. But at the end of the day, it's exactly 10 ounces. You know exactly what it's worth. It's sterling silver. And you can see here the salmon-colored portion. This is a crowded table because silver is used in so many different things. Silver, the salmon-colored portion of fabrication demand is jewelry and silverware. And as we write our yearbooks, and we're writing our silver yearbook for release on May 16th now, as we write our yearbooks every year, we talk about how the fact is the jewelry and silverware industry is actually several industries in several quite distinct markets. There's jewelry, silver jewelry that is bought for adornment, and there's silver jewelry that's bought as an investment, and there are silver objects that are bought as adornment, but there are also silver objects and statues that are bought as a quasi-investment there. And when it's sterling silver and it's exactly measured, you know what you're buying, both as a piece of object art, and you also know what you're buying as a piece of bullion. That's what I wanted to talk about today. I thought I'd do a little show and tell. I also will talk about the markets. As I said at the beginning, we have seen the gold and silver prices fall sharply this morning. They've come back some. Gold's off a couple dollars and silver's off 50 cents as I speak from yesterday's close. Gold and silver sold off in alignment with stocks and falling yields on bonds and oil and platinum and palladium and other commodities. We have expressed a view over the last several weeks, both in our trade recommendations and in these videos and in other reports that we produce for clients, that we thought that the gold and silver prices probably would back off over this course of the second and third quarters. We've seen relatively strong prices through most of April, follow on from the increases that we saw in gold and silver prices in March during the banking crisis. Investors are still very much unsettled. But we do think that you will see lower prices. We didn't think that we'd see them this week, partly because we have the May silver futures contract rolling. I guess at the end of last week, we had about 306 million ounces of May open interest still in the COMEX May contract. It's down to about 220 million ounces as of yesterday. And that will pretty much be behind the market by Friday. I don't know that anyone wants to make major positional changes in advance of next week's Federal Reserve Board Federal Open Market Committee meeting, which will probably result in another 25 basis point increase in interest rates. But the markets are trying to assess whether the economy is teetering on the brink of an immediate recession, or whether the economy, both in the United States and on a global basis, has a lot more power to go, oomph to go, and it may be the end of the year or even in 2024 before we see more severe and hostile economic conditions. The consensus is still that they're coming, but that they may be delayed several quarters, 2 quarters, or even longer into 2024. So our expectation has been that we would probably issue a short-term sell recommendation after the FOMC meeting. We may wind up doing it sooner, but we've been telling our clients and others that will listen to us that they should probably be leaning toward the downside on short-term price movements, that we might see weaker prices in May into September, October again. It's pretty much all I have right now. I will be participating in another Rick Rule boot camp on, they didn't change the typing. I am sorry. Rick Rule is having a boot camp on Saturday on electric and battery metals. I will be participating in that. I think there are 2 open question and answer periods. There is a panel that I'll be talking about, and then I will give a little bit of talk about high purity manganese, which is used in lithium-ion batteries. We will be releasing our silver yearbook on May 16th, and our platinum yearbook will come out in the middle of July. In the meantime, you can come to our website, read some of our free reads, and order some of the other reports that we produce. Take care of yourself. Take care of everybody else around you. And try to be nice to the world. And we'll talk to you on Friday.